Well, folks, it's that time of year again. No, not pumpkin spice latte season. It's Nobel Prize season. This year, the Economics Prize went to a trio studying institutions: Darren Acemoglu, Simon Johnson, and James A. Robinson. Institutions? Sounds as thrilling as watching paint dry. But these aren't your grandma's knitting circles. We're talking about the rules of the game, how societies function. Think property rights, legal systems, government accountability. Acemoglu and Robinson argue institutions hold the key to prosperity. Inclusive institutions help countries thrive. Extractive institutions lead to struggle. So, what does this have to do with China? Buckle up, we're diving into the Chinese economic miracle. It's a story with more twists and turns than an episode of Succession. Now, before we get to China, let's unpack this whole inclusive institutions thing a bit more. Acemoglu and Robinson argue that when everyone has a fair shot, it unleashes innovation and entrepreneurship. People are more likely to take risks and invest in their businesses if they know the rules are fair and their property rights are protected. Think about it. Would you open a restaurant if the government could seize your hard-earned dumplings? In a system with strong property rights, you can sleep soundly knowing your dumplings are safe. Inclusive institutions lead to better education and health care, crucial for economic growth. Healthy, educated people are more productive and innovative. It's a win-win. So, where does China fit into all of this? Well, that's where things get interesting. Let's rewind the clock to the late 1970s. China, after decades of isolation and economic stagnation, was at a crossroads. Enter Deng Xiaoping, a pragmatic leader who recognized the need for change. His solution? A radical experiment known as reform and opening up. This wasn't your typical communist playbook. Deng's plan involved gradually introducing market-oriented reforms, allowing foreign investment and encouraging private enterprise. It was a risky move, a tightrope walk between socialist ideology and capitalist pragmatism. The initial results were promising. Special economic zones, like Shenzhen, sprang up, offering tax breaks and incentives to foreign investors. These zones became engines of growth, attracting foreign capital and technology like moths to a very bright, very capitalist light. But here's the thing. China's economic transformation didn't exactly go hand in hand with political liberalization. While the economy opened up, the political system remained firmly under the control of the Communist Party. So, is China an example of inclusive institutions in action? Well, it's complicated. One thing's for sure, China's economic transformation wouldn't have been possible without massive investments in infrastructure. We're talking roads, bridges, airports, high-speed rail lines, you name it, they built it, and built it fast. Imagine a country where you can hop on a bullet train and zip across provinces faster than you can say supply chain optimization. That's China. This infrastructure boom has been crucial for connecting businesses, facilitating trade, and attracting foreign investment. But it's not just about shiny new infrastructure. China also invested heavily in education and healthcare, recognizing that a healthy and skilled workforce is essential for sustained economic growth. Millions of people were lifted out of poverty, creating a burgeoning middle class with newfound spending power. Of course, this rapid development came at a cost. Environmental degradation, income inequality, and concerns about worker rights are all issues that China continues to grapple with. But there's no denying the transformative impact of these investments on the Chinese economy. The human factor from fields to factories. China's economic rise wouldn't have been possible without a massive pool of low-cost labor. As the country transitioned from an agrarian society to an industrial powerhouse, millions of people migrated from rural areas to cities in search of work. These workers formed the backbone of China's manufacturing sector, churning out everything from iPhones to IKEA furniture. The sheer scale of China's labor force, combined with relatively low wages, made it the world's factory. But this reliance on low-cost labor is a double-edged sword. While it fueled China's initial economic boom, it also created challenges in terms of wages, working conditions, and social mobility. As China moves up the value chain, it faces the challenge of transitioning from a labor-intensive to a more innovation-driven economy. Speaking of innovation, China's no slouch in the tech department. In recent years, the country has emerged as a global leader in areas like artificial intelligence, e-commerce, and renewable energy. From Alibaba's sprawling online marketplaces to Tencent's ubiquitous WeChat app, Chinese tech companies are making waves both domestically and internationally. The government has played a key role in fostering this tech boom, investing heavily in research and development and providing support for startups. China's also making strides in areas like quantum computing and biotechnology, positioning itself as a major player in the industries of the future. This technological leapfrogging is crucial for China's continued economic growth and its ambition to become a global innovation powerhouse. But this rapid technological advancement also raises concerns about privacy, data security, and the ethical implications of technologies like facial recognition and artificial intelligence. The road not taken, a glimpse into an alternate reality. So, what would have happened if China hadn't embarked on its path of reform and opening up? It's impossible to say for sure, but it's safe to assume things would look very different. Imagine a China stuck in a time warp, its economy stagnant, its people mired in poverty. Without access to global markets, foreign investment, and technological know-how, China would likely be a shadow of its current self. Economic stagnation could have led to social unrest, political instability, and a whole host of other problems. The consequences for China, and indeed the world, would have been profound. The China Model, a lesson in economic alchemy? China's economic transformation is a story of remarkable achievements, but it's also a cautionary tale. The country's success has come at a cost, and many challenges remain. So what lessons can we draw from China's experience? First, there's no one-size-fits-all model for economic development. China's unique blend of market reforms, state intervention, and cultural factors has played a crucial role in its success. Second, institutions matter, but they're not everything. While China's economic rise has taken place under a specific political system, it's important to remember that correlation doesn't equal causation. Third, the journey is far from over. China faces numerous challenges, from income inequality and environmental degradation to an aging population and the need to transition to a more sustainable growth model. As China navigates these challenges, the world will be watching closely. Its successes and failures will offer valuable lessons for other developing countries seeking to chart their own paths to prosperity.